Thank you, gentlemen. Congratulations on the launch of the India LP report. It stands officially launched, and we quickly move forward to another very important report launch. Now, from the LP perspective, we are moving on to another equally important dimension of the ecosystem, and that is capital markets and exits. As India's private capital ecosystem matures, the role of public markets as a pathway to liquidity and scale becomes increasingly significant. It gives us a great pleasure to move to the launch of the India IPO and Capital Markets Outlook report brought to you by Unicus Consultech. The report looks at the evolving IPO landscape in India and the role that capital markets will play in supporting the next phase of growth for India's private capital ecosystem. To launch the report, please join me in welcoming onto the stage Partner Accounting and Reporting Consultant at Unicus, Mr. Raghuram K. Also the co-founder and CEO of Unicus, Mr. Jamal Khatri, and President of IVCA, Mr. Rajat Tandon, to kindly do the honors and launch the report. And that's the IPO and Capital Markets report getting launched, ladies and gentlemen. That will look at the evolving IPO landscape in India and the big role it has to play in supporting India's growth story going further. You can always reach out to the IVCA team for a copy of the report that's getting launched. Many congratulations, Unicus, and many congratulations, IVCA, on another remarkable launch. I request a few highlights, insights, and key takeaways from your side, sir.
I would first thank IVCA for this wonderful opportunity. We had done a detailed research on the capital markets outlook and more importantly on the IPO markets over the last year. As you would see that this publication provides very detailed insights on various activities happening over the last 2 years. You would see the last 1 year alone, there has been a record 100 IPOs, which has been on the main boards. Of course, the other markets also had a great amount of inflows of money. In the primary markets, just on the main board, there were more than about 1.74 lakh crores raised as public money. And the primary market was quite stable. Within the entire launch of money, we also observed that about 65,000 crores was raised only on the primary and the rest were OFS. The share of OFS kept steadily increasing, which essentially gave a great boost and a confidence that the investors were able to still realize the values what they were able to realize. However much the current economic and geopolitical situation is making this market tough in the first quarter, there are a lot of IPOs lined up. We have over 200 DRHPs filed already with SEBI and waiting approval and to be listed. So even if none of the companies go ahead to file their DRHPs, we will still have about 100 odd companies coming out easily in the next 1 year. That really shows the power of the market. We are also seeing a great and good trend of MNCs having great interest in the Indian capital markets. We saw Hyundai, we saw a lot of other companies coming through in this market, and there are 5-6 other companies interested to open up their own doors into the India market. That's a great trend to observe in the coming year. The other good trend we are also seeing is many companies who got their listings out of India, coming back to India, flipping the structures and trying to list back in the India. This really gives them a confidence on the market out here, and the valuations speak a lot, and therefore that trend is going to also be up. The other trend which we also noticed is the ratios of DIIs and FIIs, right? All of you would be aware that the FIIs are pulling money out in the last year, which is now backed by DIIs, and we also saw the same trend, no surprises in it, about 5% shift, while the promoters' stake stood steady compared to 24 and 25. We did see a shift of money flowing between FIIs and DIIs. The other interesting point, this publication, actually you can go through the entire thing on the book. We have a copy in our stall and also laid out here. Is what I want to highlight is with respect to the use of IPO proceeds. While the entire primary, as I said, was roughly about 65,000 crores over the last 1 year, about 30 to 35% of that money has been used only repay working capital, and about 15 to 16% of that money has been used to repay debt. That clearly gives an indication that even the primary 50% of the monies have been used to reshuffle capital between equity and debt as an allocation, and hardly about 20% has gone into future expansion mode. And therefore, there's a lot in the upcoming year as people keep raising money for the expansion plans. In terms of the entire IPO process, it's been quite expensive as well. Typically, we saw a trend of about 3 to 4% of money being spent by companies in the entire process to raise the fund. Of course, the amount varies depending on the size of the respective IPOs. One other thing we'd want to have a clear look on as all companies embark this journey on IPO is the way SEBI is looking at some of these things quite carefully. In the past, number of comments from SEBI has been quite less, but we now do see at least on average about 100 queries come from SEBI for each of the DRHP filed, and some of these are focused on key risk factors and governance-headed structures. So all the companies beyond that business story needs to also focus on their governance and structure, and also the way they plan the entire IPO process, because that is sometimes derailing some of the companies on timelines, because the SEBI queries really take a lot of time to respond back and for them to give their own subject on. With this, I would thank IVCA again for this wonderful opportunity. You could get a copy of our report and from our booth, and looking forward. Thank you so much.